correct me if we mess up on AMD. We're going to go off the agenda today. Pretty simple. I know we have gone through it several times as a group. We're going to start with the Fibonacci's, retracement and extensions, maybe some level 2s on the bid and ask, do the earning price evaluation on Thinkorswim and Robinhood, briefly talk about butterfly spreads and spreads in general, something that are currently going on the watch list. I don't have much yet. I haven't done many research. I kind of wanted to see how futures are opening. Mindset into the following week with inauguration and just Q&A. Hopefully we can get this all done within an hour and a half. I don't want to keep everybody here on a pretty beautiful Sunday over here in Portland. Jared, could you pop up AMD if you have your thing ready?
Yeah, 1 second.
I appreciate you being here.
All right. I'm using a trading view, but it might be it's the same idea pretty much.
I know that we're doing the extensions and retracements because for the third time this time around, because it's a little confusing finding the ideal pivot points. But quintessentially, Fibonacci's are kind of theoretical. It doesn't have to be exact, but they're pretty close as long as you find the supports. You want to start with the retracement from the top.
Okay.
So
I'm going like right here, right?
Yeah, about right there. So with retracements, I think you have to start from the bottom and then go top, right? No, it's top to bottom on retracements.
Yeah.
So go all the way down to 56 on your left. Over. All right, up a little bit. Maybe that is that 58.
Right here?
That's too high. I think it's like 57. Right there.
Yeah. Okay.
So ideally, when you're looking at retracements, everybody kind of differs on time frame. What time frame do you have here?
I'm at daily right now.
So is this daily, just daily on day, or daily per hour?
Daily per day.
Okay, so I know CT prefers doing a little bit longer, like days and longer than 4 hours. I personally like 1 hour, 2 hour, and 4 hours about. Then you can actually see bounces. So the idea behind retracements is that pretty much how RSI correlates to Fibonacci's is these are marginal zones where it has to hit before breaking above consolidation zones for RSI. So if anybody has questions during this, please holler. Quintessentially, why this is really important is because whenever we're trying to price target, we want to have the why, right? So having the retracements, you can actually see that we're bouncing at the lower bound for AMD and it's breaking under as of right now. Whenever we're doing the retracements, you always go from the 100% to the most known resistance point, bottom, or just anything relevant. I typically look at a 6-month window. Anything past 6 months, unless it's actually relevant data to the current supports, it doesn't really help. And then Jared, could you and then next we're going to talk about is the Fibonacci extensions. So with the extensions, you go from the bottom to the top and then back to the bottom. So last week we figured out that most extensions, right there. No, is it that for you guys? I don't know what it is.
It might be different for TradingView, but I know right on Thinkorswim.
Try the baseline fib extension one right there, just to see what that does really quick.
Oh yeah.
Okay, so it does the same thing. Cool. So quintessentially, the extensions kind of work differently, but pretty much the same thing. That there's so when you're looking in the Fibonacci chain of percentiles, it goes from like 11.3 to 23.4 to 36, 33.6 or something like that. And then there's like a 50%, there's a 40 something percent, there's a 50%, then 62%. If you look very closely at the 6.18, which you can see there's a huge gap from the 1%, which is 100, to the 61.8. So there's about 4 or 5 other Fibonacci's inside that zone. So you can add those Fibonacci's when you hit edit on Thinkorswim and add in the decimals so you can actually have those zones in. I would say the most crucial is the 23.4 or 23.3. I don't remember the number exactly. And the 33.4 or something like that. Those are basically the midpoint between the 50 and the 61. Typically, people look at the 61 because that's more of a long-term stretch. So it will most likely happen. It's just a matter of when. Let's see. So what we're looking at here, for example, is AMD is on a downtrend as of right now. We're trying to look at the overall triangle, but we're seeing it keep on retracing. And the only reason that it ran recently was CES, but as of now, it kind of consolidates. If you've been following AMD for a long time, AMD doesn't typically move more than $2 a day, even if that, or $1. So with the last major move of almost 10 plus, I think it was like 8.7 or something. It's just very strange. We're going to an inauguration week, so things are going to be super bumpy. I wouldn't hold anything if we don't have to hold anything. Does anybody have a ticker that they want to pull up for extensions or retracements? Anyone?
Just a heads up too for extensions. I wanted to add. I use extensions for all-time high stocks that are hitting all-time highs because it allows me to identify a potential future price target. So let's say that like Apple's trading at 150 and it's never moved up above 150 before, or so it's trading at 140. Let's say that I'm trying to look for a next price target above that. What's that most recent high in December? That one right there. So put a line between that high and the previous one back in September.
That's right.
So
something like that. Yeah. So then I can take a look at. Okay, so if it does attempt to break back up above, to test the all-time high, look for a price target somewhere around. Let's say I want an expiration of February 19th. I will probably aim for that 23.236, so 143, maybe 145, as a price target for February 19th expiration. So that's where I would shoot, because assuming that what's going to happen is that back in December, it tried breaking that previous high. It failed. It pulled back. And actually, if you were to zoom out of this, if you were to use the left side, the September peak, the huge right there,
mm-hmm.
and then connected to the right side, you kind of see like a cup and handle in a way. You see that? So it failed to breach all-time high back in September. It fell down, created a slight base. It started going back up, and then it attempted to break it one more time back in December, and then it pulled back and it's creating that handle part now, which is it's consolidating. So if there's what is this, 1D? Okay. If you were to switch it to 1 week, can you do it to 1 week? Yeah, that's something like that. Yep.
Yeah.
So what we would look at is whether or not there is going to be bullish volume that could excel this stock further beyond the previous all-time high. And I would aim for 145, maybe even 150 if we're looking at March 19th expiration, as a short-term price target as a short-term price target. If it fails to break it with weak volume or bearish volume, look for a price target of that handle base, which is 127-ish, as a short term for February or March, probably February. So with clear patterns like this, now if you have a clear understanding of where the trend is going to, now we got to look for price targets where we can actually capture the price movement and where it could potentially get hung up a little bit. Okay, that's my contribution.
Oh, thank you. Appreciate it. From that, so like one of the rules, or like not rules, but what you should do if you're going to enter anything is that draw some lines on Fibonacci, just to have it. Especially like you can see on this chart right here with the apple, there is a red line through the bottom base support, right? So at least if you know that if it drags under that support, then you'll get killed because it's going head and shoulders kind of pattern retracing, but it can bounce off and break all highs. Apple does have earnings on the 27th, FY. We're gonna move on to talk about bid to ask. Does everybody here know what level 2's bid to ask is before I start talking about it? Yeah, no.
Go ahead and just report.
Okay. So, Jared, do you want to just can you pop up?
So I don't have
basic level 2's of bid to ask.
I don't know if I have
like Robinhood or something.
Yeah.
Can't see your screen right now.
So while he's pulling that up, I want to ask a question. Fibs.
1 sec.
So, since there's two different types of things, the Fibonacci retracements and the extensions, in what scenarios would you be using the retracements, and what scenarios would you be using the extensions, or would you be using both of them to just?
That's a great question. So, with the retracements is when pretty much like when you're at all-time high under, you can set a retracement early on, just in case. And pretty much if you know how we were drawing upward ascending triangles the other week, right, Swimmy? If you were to hit, like, you draw a trend line at that wedge where exactly it meets, and then you would draw a retracement from there, because most likely when it hits that wedge, it will conflict unless it just completely rips over. And if it rips over, that's where you would be using the extensions. But if it has any slight pullback, then the retracements will be the next key level, because it will parallel to the VWAP and then retrace towards that Fibonacci, because your first VWAP should be halfway to the nearest Fibonacci, or if not, the bottom VWAP.
So would you have both retracements and extensions on the same graph?
I typically do, just because then you can actually see, like, have an indication to if it's following the fib or not. And it really just shows you if it's going to stay consolidating or stable. And stable, I mean like an ascending movement with volume.
Okay. And then the last thing is for drawing those, you do from high to low, and then where does the third one go?
Oh, back to the bottom, back to low, high to low.
So high, low, low.
Yeah, low, high, low.
Oh, it's low, high, low. Okay.
Yeah, it's low, high, low.
Okay.
Yeah. And don't forget that you should add in the other decimals, because it doesn't give you the full range of the extension otherwise. You're good. Can we go over to the Robinhood? Just pick a random option chain. just go into options.
I haven't used Robinhood in so long.
Thanks, Jared, for being postmaster today.
Yeah.
Couldn't do it without him.
All good.
Let's just look at the 128. So, to any new trader, if you never looked at the level 2s, this is what we call level 2s. It pretty much shows on both platforms that we particularly educate on with Thinkorswim or Robinhood, it will say a bid amount and an ask amount. So the bid amount is what people are willing to pay for that contract. And then the ask amount is how much people are willing to sell the contract. The mark amount is what people are marking it sold for, or the market maker wants to sell it at. So, and it even tells you the previous close, which is yesterday's closing price, and the previous highs, or today's highs. These are crucial, and it gives you the Greeks. Read up on the Greeks if you haven't. These are crucial because if you go further strike the spread, so the spread is the difference between the bid and ask. So can we go to like the 150 strike? That's maybe too far. Let's go to 140 maybe, or one. I need some more premium. Let's
Where are we? We're at 128.
probably
Let's try
130, I guess.
Yeah.
That's not going to do it. So when you go into further expirations, let's go with that. And then pick a probably 140 now. Oh, the spread's not that large. Well, typically what you'll see with larger...
Tesla. Why don't you do Tesla?
Yeah, okay. Let's do Tesla.
Tesla might have a wide spread.
Just go up. Let's start there. That's fine. Okay, so this is a decent spread. So we can see the bid at 4,780, and we can see the ask at 4,865. The spread would be about $80, $85, right? So in theory, you can buy this contract between that price. People are marking to sell it at 4,823, or let's just round it to 4,825. And in theory, you can buy this contract for 4,780 if somebody's willing to sell it at that price. So what can happen, what we call in options, is called snaking the chain. So sometimes in the options chain, people haven't bought contracts yet because you'll get news ahead of the chain. So if you do get news ahead of the chain, you'll see weird spreads where it doesn't make sense and the pricing isn't very solidified yet due to the news not hitting. So you can always bid for a lower asking price, but it doesn't mean it will fill. Robinhood has a really hard time filling those contracts, whereas Thinkorswim has a little bit better likelihood. So if you can snake the chain, always do it because you could always get like a better strike. Let's look at the 915 bids to ask. So maybe not that one, but sometimes you might be lucky enough to have the same premium offer from a lower strike. So you can pay the same premium closer in the money for the same amount of money that you're going to put up anyway. So ideally, that's what you want to do to maximize your premium when entering a position. The level 2s are nice because you can also see that there's a multiplier after the bid and ask. That's how many people are willing to buy or sell amount of these contracts during that duration. And quintessentially, if there's more people buying the contract, that means that their premium is going to run up. If there's more people selling or asking, that means the premiums are going to run down. Any questions there?
Not a question, but just a comment.
Yeah.
Thank you for explaining that because I've benefited from that, not realizing that that's what was happening. On Thinkorswim, sometimes I'll put in to buy a contract and it fills at actually a lower price than I even put to buy it at.
Yeah, so that's kind of the beneficial part about Thinkorswim over Robinhood. Robinhood will not fill you at a lower premium that you set in, right? I mean, sometimes it will, like $1 or $2, just because of the timing delay. But if you set a premium price higher than your entry point, but the premium drops on Thinkorswim, it will fill you at the best offering price possible. So you don't actually have to do that equation, and it's also beneficial because when sometimes I know there's a handful of us that will set premiums prior to 6:30 a.m. to try to get it filled, and that's how you can kind of get the best fill for your worth. Going into the futures, I would definitely look at longer durations to be able to snake the chain. I think the best example of this would have been GameStop last week, where like I think Alan here, AP got into like I don't remember what strike, but he got in for $50, and that $50 became like $500 or something. So he got in before the news, but he also saw the premium wasn't pricing in what the actual evaluation was. I'm gonna press forward unless somebody has a question. Okay, the next part is we're gonna learn how to price in earnings. I know that's really crucial and how market maker kind of prices or adjusts earnings. The easiest way to kind of do it is Thinkorswim. When you go into Thinkorswim, I'll show it to you later because I know Jared's probably gonna need to load it. But can you go at the money strikes right now for Tesla? Okay. So we're gonna use this example for Tesla for February 19th. That's not the earnings, but this is how the market maker prices in the evaluation for that week's contract movement adjustment, right? And what that means is like they take the current call at the money strike, right, which is 8,350. Let's just make it simple. So, and then can you hit the put really quick? And so it's pretty much 8,100, 8,200. So hit call again. So what you would do is add, let's just say 835 plus, I'm just gonna go with 82. So that equals 16. So, oh yeah, that'll be cool. So 83.5 plus 82. Right. That's 165.5. So theoretically, what this is saying is that the IV, this is how you calculate IV, implied volatility. So the implied volatility means the range of movement that can happen during that week's duration. So it's saying up until February 19th, the price movement of Tesla can go plus or minus $165.50, right? And in theory, you would use half of that to adjust for the plus and minus, because realistically, it's plus or minus about $80 or $82.
Where'd the 82 come from?
So the 82 came, from that.
Gotcha. Okay.
Yeah. And so you take the 165 divided by 2, and that would become 82.75. So let's just say $83. So you have a plus or minus $83 from here until February 19th, or more on the upside or more on the downside, depending if it breaks under or over this. Why this is kind of useful is if you look at like monthly trends, you can see monthly growth percentage gains or monthly dollar sign amounts that it actually gains, right? And from that, you can actually say, hey, you have about $20 more upside or $10 downside because it's overextended or underextended. And that's how you can project better what's going on. Oh, you don't have Thinkorswim?
It's the new computer, so I'm just gonna add it.
Oh, okay, my bad.
Oh, you're good.
Any questions about doing, and on Thinkorswim, it literally says for you where the market maker price is when you go onto your contract line. It says the percentage and plus and minus. So you don't have to do this calculation. It's literally on the option chain. Just look on the right. If anybody has a hard time finding that, just ask me and I will locate it for you.
Thanks.
Or
Do I
unless
have it
CT's
up now?
pulling it up.
Yeah.
I can show you if you want.
Okay, my computer lags whenever.
Thinkorswim.
I got the loading screen.
I got the loading screen right now.
Get the loading screen. Okay. How about now?
Give it.
Um,
I think so.
oh, I exit. Can you exit your stream?
Oh, is that why? Okay, hold on.
Can you see it now?
Oh, here we go.
Whoa.
Yeah, it's up.
Okay, so for Tesla, it'll be right here on the right side. So I'm under trade, Tesla, then here. And actually, like this page is super helpful because not only it shows you the option chain and the implied move, it also gives you the daily sentiment showing that most of Friday's option contracts purchased were calls over puts. The grand total was 1 million. And of the calls, we're looking at delta. Delta is the most use it as a probability of the contract being the strike being in the money by the expiration. Most of the delta was for most of the contracts were purchased with deltas between 0 and 20. So let's say we're looking at January 22nd. I have it sorted by delta here, so we're gonna look for 0 to 20. So it would have been purchased from. That actually didn't help. It would have been 1,220 strike the furthest. And then I also, for earnings specifically, like to watch it right before close to see where most of the transactions come through, whether or not it's going to be calls or puts, because those people with the most up-to-date information is going to try to get their position in right before close.
You don't have add a tab for the time?
No, I don't.
Okay,
It's right here automatically.
that's cool.
Yeah, so I like to watch this, especially the last 15 minutes, to see where most of the volume is going to be, whether or not it's going to be calls or puts. And then you can also see if it blinks and stuff like that. I don't know how, Ben, you have yours where if it changes the color, it'll highlight the whole row. I think that's helpful, but I've noticed that what red means is that this particular contract, the price, this contract is being bought at a price lower than the bid, lower than the bid, or lower than the ask. And when it's when it's blue, no, I'm sorry, when it's green, it's being bought at ask or higher. That's how I use it. And then if it's yellow, it's in between. It's the mid usually. So if the spread is wide, it's between the bid and ask. That's what that means. That's what these colors mean.
Can you point out the MMM?
That's this part, right? You're talking about the implied?
Yeah, so that, but then it also says it. I swear it started right there. No, can you go up to trade grid and open that up? No, that's not it. Well, there should be a feature next to where you say Tesla right there. It should say MMM, like on that same row.
This one on
Yeah.
this row?
Yeah, on that row, but I don't know why yours doesn't. You probably removed it or something. It's all good.
I don't know how to.
No, you're good. So like right next to the bid to ask, right? usually should say MMM. So that's market maker, pretty much evaluation price. And it says the same thing on the option chain. It says plus or minus whatever. But the MMM is also the same equivalent, doing the equation that we did earlier to figure out the evaluation of the earnings or weekly the weekly IV. So you can find it not only doing the equation wise, you can find it on the option chain, or it says MMM period right in front for you. What's next on the agenda? Any questions about doing the earning price evaluation calculation? Probably not. Okay. Next part is we're briefly mentioning about spreads and butterflies. I'm not the spread guy. Mr. Bang was supposed to be here to talk about spreads a little bit. The reason I want to talk about spreads and butterflies is they're way better leverage if you can have the collateral to afford them. I know that Flo Rider here has been writing a couple cover calls. Do you want to share your experience so far? With
I mean, so far it's pretty straightforward.
Yeah.
I got in with Mr. Bang on the CCIV stock at like $14, and I wrote a covered call for a 30 that expires in February. And one thing that David pointed out to me was that if the stock closes at, let's say, $31, they're probably not going to execute the contract because they paid me $3, or I guess it's not like necessarily me, but they paid the premium. So, so like, right, like when I sold the contract, I got $3 a share.
Okay.
So their break even is $33. So if the stock closes at $31, they're still lost money if they execute the contract.
And then they would still end up paying you, very much.
Right. So they probably won't execute the contract, in which case I keep the premium and I keep the shares.
With the butterflies, I'd look into what are broken wing or open winged butterflies. They're really interesting. I would pull it up. Let me see if I can pull up an example of what it looks like and kind of just explain it. Give me 1 second. And these, I don't do open wing butterflies because they're complex as hell. Or broken wing butterflies. What was it called? Yeah, broken wing butterflies. Stocks.
Say up.
Okay. I'm pulling one up. Give me a sec.
Say up.
Oh, this is from TD. Great.
Say up.
And I'll post a link about it just so you guys can read up on it.
Up. Say up. 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 Watch hand.
Oh, that's not going to work. Page not found from TD. Can everybody see my screen?
Yeah.
Okay, so this is called a broken wing or long wing butterfly. How it practically works, it's kind of like an iron condor and a spread all in one. Once you get more technical, as we all get more technical, this is probably the route that we'll be taking. Or maybe it's very advanced. It's kind of tough. That's why I haven't really attempted them myself. But ideally, what stock option traders do is that to maximize profit, they will always hit their certain price target. So let's just say, and then there's losses on both. So what this is, it's pretty much a spread right here between here and here. And you'll always be profiting as long as you stay between, which looks like an iron condor. And how this is nice is that you can break this open by buying a call right here or buying a put here and just continuously riding it out and then closing out your butterfly. There's a lot of collateral that goes into all this, but the nice part is you can open this up and continuously ride. So like we see industrial brokers always riding between margins, and this is how they maximize profit, by doing butterflies and opening up spreads by continuations. So they always are winning one way or the other. So even though that we pretty much focus on nakeds, there is ways to turn nakeds into butterflies and spreads to make it work for you still. So whenever you're in a losing contract, think of an open-minded way to make it actually work rather than kind of not. This is just opening up the further notes to have as tools to use down the road. Just knowing that there's not only one way to close a loss. We've been exploring rollovers a little bit too, and we'll probably go over that down the road. Cool. Current watch list stuff. I don't have anything on my current watch list besides Ascend, really. Ascend did pretty well. I'm gonna close up this really quick. Hold up. So Ascend did pretty well. Next week really bumpy. I wouldn't want to trade anything, or I would just kind of chill. Jared, CT, what are you guys watching into next week? I know that Jared just posted a thing, I think.
Hey.
I didn't post anything yet, but all I'm looking at is whatever I'm holding for now after this week.
Okay.
But I know BA I'm always looking at. Keep an eye out. It looks like, as we were talking about earlier too, cup and handle might be forming. So
yeah,
but it's after this week I'm gonna get more. I'll go back into it again, just because we don't know what's gonna happen during Inauguration Day.
Yeah, with everything pivoting, it should be weird. But I've been hearing a lot of news, not only from CT, about the whirling 20s effect after all people have all this money in their savings and stuff. So we should see a lot of bullish movement in the next several years. Sorry, my kid's going ham.
No problem. I'll post my watch list throughout today. I'm just gonna be watching out for Bitcoin, honestly, and Riot. And Mara. I think there's gonna be, usually Bitcoin's been moving, especially the last like 2 or 3 weekends. It's been moving a lot on the weekends, and so we typically see that as a continuation on Monday. But also with the volatility in the market this week that I'm anticipating on, especially because of the inauguration, we could see some negative. You see the market move more on negative news of like potential insurgent, stuff like that, which in turn would strengthen Bitcoin and crypto. So I think if the market is going to be red or bearish this week, I would like to shift towards stocks that are benefiting from the bullish movement of crypto. So like I said, Riot, Mara, those are two that I'll be looking at. I am in Riot calls right now that expired the end of this week. Aside from that, if there is negativity in the market, I will be looking to buy to add to my long-term positions in IWM and SPY. I'm also in a lot of energy stocks right now that I've accumulated a lot of shares. I'm going to be accumulating more if there's more downside movement. It looks like I was viewing the ETF TAN, which is the one of the major solar energy ETFs, and it looks like it's declining. Same with ARK Investments. ARKK has been declining too. It moved even further after hours, a whole nother dollar. So with ARK, since it's so heavily invested in innovative technology, I think it's a sign that there could be some downside movement or continuation of Tesla, Square, PayPal, those types of companies, especially during the first month of Biden, because I know that Biden is really wanting to think it's negative for the tech. That's what I've been reading on. So there could be a continuation coming Tuesday. Sorry, not Monday, but Tuesday. So I'll be watching that.
I personally picked up some Riot a little bit early on. I still think there's a lot of upside on Riot, so I'd buy, if you can, like buy the dip into crypto. It looks like it's going to be around. I did see your recent article, something like super bearish on Bitcoin. So let's just wait until the open.
I'm also watching GHIV. It's Gore's Holding. It's a SPAC, and they have a shareholders meeting on the 20th to solidify the merge. But I also hear that majority of the shareholders are pro merge, which is going to be with a huge mortgage company. I honestly own puts right now because what I'm planning to do is sell the news. Everyone bought the news with SPAC, and I believe it's on Reddit. They bought the news, and now come the 20th, when they think there's going to be a lot of profit taking on the 20th. So I currently hold $10 puts that expire February 19th. So that was the earliest expiration with the closest strike to the money. In addition, what I wanted to mention in regards to what I wrote in the chat was that I actually came across a website or a source that has an algo built in that analyzes all of Reddit, specifically Wall Street bets, to look for sentiment, either bullish or bearish, and then it also identifies which companies has the most chatter. So I'm running it right now to see how accurate it is, but if it is something very accurate, what I want to do is work with the developers to bring that into our server as well too, because for instance GME was a fucking Reddit Wall Street bets pick, and it just boomed off of that. So I think those are great opportunities to chase the momentum and profit off of it. So if this algo is correct and accurate, I would like to put that into the server for all of us to take advantage of. Cool.
Does anybody have any tickers that they want us to look over, or positions that they want to mention? Anything along those lines? I know Dispenser's new, and Shell here is newer. So welcome to the crew. Really appreciate everybody coming to the meeting. Don't be shy to talk. We're all here trying to help each other. Education comes first here. So yeah. Anything going on?
Thanks for that. I'm actually eating right now, so.
Oh, you're good. I'm eating too, so you know, I'm trying to talk and eat. It's pretty hard.
Yeah.
Let's see.
What's your name? Is Alan?
Ellen?
What? No, I had no question.
Oh, Alan had a
Someone
question.
else-
I think your girl had a question
someone
though,
else
Alan.
No, someone else asked me a question.
Yeah, ask her a question.
Oh, that's kind of sick. The Wall Street bet indicator. That's wild.
Have you looked at Tesla yet already? Or their earnings?
I honestly think they're gonna retrace to 800. Like, if they don't get a boom across 875, so Elon could be the richest man, it's gonna be a tough, because like last two earnings that we played AP, we got clapped, but we rode it all the way up to earnings, which was 3 weeks early. So a lot of the weirdest thing about this time around, as CT was mentioning, a lot of people are shorting things and not holding anything, whereas a year ago people would just hold everything. So as uncertainty comes around this time, at least this year, people were just scalping the crap out of everything. So if you're up on any contracts, just get out at that point. Not saying like cut them early, but you can stagger it for more profits. I think sticking to the 10 to 20% rule or anything higher as of right now is probably crucial going into the inauguration. just because there's just so much craziness in the like economical environment. Let's see. We don't have, so no one has any questions? Oh yeah, mindset. So we were talking about mindset just a little bit. Pretty much just be very, very cautious. I've never traded during the inauguration myself. I know it's just really hot waters right now.
So gun stocks.
What was that?
Gun stocks.
I would start switching it up from options to stocks. Like CT did mention buying the dip a lot. I'd just start building a long term, because if we do get a roaring 20s, or which we probably most likely will. If we most likely get a roaring 20s event, then everything will pop pretty hard. So going with key stocks that can grow and have dividends long term will help just manage future investment capital.
I think AP said gun stocks.
Gun stocks, yeah, that's fair. During the riot, actually, Smith & Wesson boosted. Like during the Capitol riot, that was crazy. Like it was one of the only companies that boosted, because Smith & Wesson makes all the 9mm for the police informants. So guns is always a bullish move. That's just how guns operate. But sometimes they go. What was that?
When is the big day next week? Next.
I think it's
The 20th.
Yeah, the 20th, which would be Wednesday.
Yeah, definitely the 20th.
Okay.
There's also a lot of National Guards right now in DC, about 50,000. They have the entire city locked down right now for the last week or so, up until the inauguration. It's pretty fucking crazy over there right now, honestly. You can't really get close to the Capitol building without reason. Also, airlines are not permitting any type of are not permitting anyone to carry guns or to take their guns with them to DC or near DC. So that's a huge thing too. So, I mean, after the Capitol riot, I didn't realize how serious the matter is until I just learned more of how DC and the National Guard is like taking control of the entire city to make sure that there's not another civil war, which is freaking mind-boggling to even think about.
Yeah, no, that was crazy. One a lifetime opportunity. I wonder how they're gonna write that in the history books. Let's see. I'm trying to think if there's any particular tickers that I found over the weekend. I was up a little bit late last night, but mostly
Check out BlackBerry.
Yeah, the BB. BlackBerry did pull back about $1.50 on Friday. I honestly want to heavily load on BlackBerry just because of the EV data news, and they just sold, like, the biggest thing about the BlackBerry is they recently just sold their patents to Huawei, and I don't know if that's a plus or minus. Like, it's probably a plus that they sold the patents and they'll make money, and that's why it boosted, but I don't know how much they will actually gain long term. I've been kind of fixated with GM. GM has been doing crazy things in the car market. Like they're really trying to push themselves like hard in the innovation realm.
See their new cars? They're
What?
crazy.
Yeah, their new car.
lineup?
Yeah, they're cool. Their new car lineup is great. Their EV is great. Their autopiloting works. Like, considering that this is an American company, Tesla is an American company too. I wouldn't cut them out, because their interface is as good or better than Toyota. Was the first company to pretty much set a standard for safety features for all these vehicles in I think it was 2014, 2015, late 2015. So like seeing the transition from GM having nothing, like pretty much bare bones, just gonna burn down to the hill, and it within like 4 or 5 years, not even 5 years, transition to having all the technology in every single vehicle, and now going full hybrid and all this crazy stuff with no sums of money whatsoever, and turn their business model completely 360 is kind of mind-boggling because they own so many other brands. So my thought process on GM long-term wise, it's probably very competitive, like, and the competitive leverage there is just because it's domestic for us and parts replacements are super cheap. So American, like, just if you were in America and trying to purchase a reliable, decent car that will last you 100 or 200,000 miles, I would actually consider GM at this point. And that's effing crazy, because if you told me this in 2016, 2015, I would never walk in GM and buy anything, like literally anything. So like I have friends over at the dealerships and stuff, and they're pushing more innovation, whereas like Toyota is super falling behind, whereas they were the leaders in EV. So that, and like the amount of capita that Toyota has comparison to GM is completely just out of the water. So I'm just kind of really surprised at like how they're lagging, because as of right now, like Toyota is going backtracking to making old model cars like the Supra. They just made the Venza. They're probably going to make a Celica. They're working on the 86s again. They're boosting up all-wheel drive Corollas, Camrys, and Avalons. Like they should have done these things from the get-go. Like the Prius should have had all-wheel drive from the get-go. And these models already was all-wheel drive and then some features in Japan, but they never released it in the States because they never thought it would sell well. When they did, they sold way more above their numbers. And this is where I think the lag factor for Toyota might be very devastating, because their main focus in next 5-ish years was to go help disabled and handicapped. So all these features that we're seeing now is meant to help disabled and handicapped and hospital field, kind of like medical field, kind of. That's what the innovation of motor vehicles are going towards. Like that's why Tesla wants to be more hands off, because now think about like a disabled person being able to like go to the coast but they can't walk, kind of thing. That's just that's a whole other market that's untapped. So it's really cool because now that's actually plausible for a lot of these car companies. And that is where the next innovation in cars and EV will be, because that's pretty much one of the last sectors where really tamed yet. So how they're going at that fact is really challenging, because there's just so much innovation with measurements of like crossroad patrol and just like collision alerts to actually provide genuine help to these disabled or like medical assisted needed folks. So I don't know, it's really intriguing to see GM almost leverage Toyota at this point, but the only reason they can't is because of numbers, sheer numbers. Yeah. Okay. Well, does anybody have anything else to talk about?
Oh, I'm good, guys.
I'm good. I hope that everybody enjoys MLK. This week is going to be super bumpy. David did mention that we're going to try our best. I'd hold on to your monies. I'd wait, like be super patient. Like this is going to be one of those kangaroo weeks, and I would not be surprised if it goes flat or downhill. We keep on hitting the top of the microphone on SPY, but IWM sounds pretty safe long term. So
IWM also follows my January strategy, which is to focus on small to mid cap stocks, and IWM has been performing very, very well. So we're still on track to completing the strategy that I recommended for January. you're following along, that's good. I was talking to admins a little bit about my plays. I've been signaling less plays. I'm just more focused on long-term plays and kind of want to establish a small fund. So kind of like what Kathy Wood does, which is just focus on a small amount of high growth stocks and build the portfolio off of that and then shift it as needed. So I will be managing it, maintaining it, adding, most likely I'll be adding to any red day. So
Jared, do you have anything to say before we close on today?
I'm good.
Okay. This is actually probably the first or second time I've ever seen 10 plus members in here. We're growing. We're growing exponentially. My goal is to meet everybody, or if you already have or haven't met me. Jonathan's in town. I can't believe he's awake right now. But truly couldn't do it without the community. Appreciate everybody here. We're gonna call. Yeah.
And despite us growing, I just wanted to keep in mind that you guys can always come to us for any questions, concerns. We're always here to help.
Yes, sir.
All right, guys. Well, you guys have a good afternoon. Enjoy the rest of your weekend.
Yep.
Yeah, man. Likewise.
Everybody have a good day.
Bye.
And girls.